Hello everyone, welcome back to my channel. So this video marks the end of the week number 60 in this road to 100k realized return challenge. And yes, if you had a look at the video title before clicking on it, this is not a typo. We actually managed to collect $6,400 this week between premiums and capital gains. Yeah, it was an absolutely crazy week, but I'll get into the details. But for the time being, and this is something that we have already expected this to happen. As you can see here, this is the activity statement from April the 3rd, 2024 until April the 3rd, 2025, so one full year. And this is the total amount of profit that we got, the $33,354.16. And then if we look again at the activity statement from April the 4th, 2025 and yesterday, September the 19th, 2025, this is the amount of profits, total profits that we got, $20,957.46. Now, there are a few more premiums still to be accounted for in here, which were the ones on Saturday, on Friday, of the positions that were still open. So, but nonetheless, as you can see here, if you look at the numbers, we have already exceeded and by quite a long margin the $50 mark, $50,000 mark. So we are currently standing at 54,311.62. Now keep in mind these values may come down and up depending on what the exchange rate is doing, because our account is in euros, but the securities that we are trading, the options we are trading, are quoted in dollars, so the exchange rate matters here. And based on what has been happening over the past couple of months, the dollar has been weakening against the euro, and so that works also against us. But nonetheless, yeah, this is something that we cannot do anything about. We can only focus on the trades that we've been doing. But for the time being, especially over the past couple of months, everything has been going pretty much smooth sailing, and yeah, we can't complain about it. And for the week, this week, it was a pretty crazy one. Of course, the biggest highlight was the Fed actually followed up on his apparent, what was already apparent to everyone, to all investors, was that the interest rates were going to be cut by, for the most likely scenario were 25 basis points. There were a few talks and some possibility of a 50 basis point cut, but that never came to fruition. But even so, if we look here at the Fed watch, and as you can see here, and this is where we stand at the moment, currently we have this target rate, all right? And so there is a 92%, give or take, 92% possibility that at the next meeting on October the 29th, there is still yet another rate cut, 25 basis points, and only at 8.1% that the rates remain between the interval of 4% and 4.25%. So probably, and as expected, more rate cuts will be in the pipeline. The Fed chairman, Jerome Powell, mentioned that 2 more rate cuts could be on the cards until the end of this year, 2025. So yeah, we'll have to wait and see what's going to happen. But so far things have been going well, and I can show you here. Now we still have these shares that we were assigned, but still, if we consider that only the profits, and of course we do not consider this mark-to-market value that I put in here, the 79 cents per share. As we can look here, these were the trades for the week, the entire week. And if we make a sum of everything that we collected, these are just the premiums, all right? We managed to collect a little bit over $4,035, and we have also to consider the capital gain that we got from the shares of IWM that we collected, and this is also reflected here. So basically, because we bought the shares at 239 and we managed to sell already this week at 241, and we still left about $3,600 on the table that we could have potentially earned. Now it was extremely difficult to predict the trade, to do the trades in a way that would maximize the profit, but it would be easily feasible for us to collect at least $1,200 more. But yeah, that's the way we did, and so yeah, no harm done. It was still a very good week. But for the time being, if we look at the trades that we did over the week, we as I mentioned in the previous video, we managed to start the week by selling 12 contracts of the IWM because the markets came down a little bit and there was not much to do that we could basically, in terms of buying back these calls and then selling another calls somewhere else, because at the end of the day there's not much we could do. We are limited to using the shares of IWM as a collateral, and so here, as you can see, we bought the calls back and we then sold the ones at the break-even point, 239. We collected more premium, so this was a very positive day. Almost $1,000 collected just on Monday, and this is the corresponding premiums net of all the commissions that we still did. And so this is on actually this is on this is just on Monday. On Tuesday, because the market came down a little bit. No, this is correct. Yeah, the market came down a little bit between these days, and so we decided to go to the calls on Tuesday at the break-even point. We sell 12, and then we bought those back, and then because, and this is an interesting point, the interest rate decision was on Wednesday, all right, and because the calls basically were expired, worthless, all right, we decided that, all right, we are going to and this is on Tuesday, we're going to sell calls for the next day, but we are going to sell at the higher strike price, because by the time these calls would expire, the interest rate decision would already been publicly known, and so probably the markets will be able to react positively to the interest rate decision, especially if a positive surprise would come, such as a 50 basis point cut. And so we decided to go ahead and we maximize much of the volatility, implied volatility in the options, and so we collected a lot of premium on particularly on these calls. Keep in mind that the price of the shares were around 238, and even so, by selling a call 2 strikes up on the 2 or 3, because it's 239, 240 and 241, actually 3 strikes above, we still managed to collect $1.02 a piece, so $1,224 dollars. And this is what we did on the next day, and this was already on Wednesday. And as you can see here, by the time 9:53 p.m., the decision was already known of the interest rates, the 25 basis point cut, the markets did not react that well. Initially, the reaction was positive, but then there was a strong pullback, and so these options were pretty much worthless by this point, and we were still with 20 minutes left in the session. And because of that, I decided, all right, let's squeeze a little bit more juice out of the out of the orange. And so, because our break-even point is 239, we bought back these 241s, and we sold the ones at 240, collected some more premium, and then a few minutes later, because the stock continued to come down very, very quickly, as you can see, in a matter of 3 minutes, give or take, 3-4 minutes, these 240 calls also were almost worthless. So basically, we bought those back and we sold the calls at the break-even point, 239, to get more premium out of it. At this point, I felt that, all right, since the market was already expecting a 25 basis point cut, there was the price was already reflecting that kind of expectation, and so I was pretty comfortable in selling these calls at the break-even point, given the way the market was reacting, which is coming down. And so we still sold more calls with 15 minutes left in the session at 19 cents a piece. And so, of course, this was also a huge, huge gain for us, given the fact that we are already pretty much at the end of the session. And yeah, we still collected here. So this is 217.22. All right, basically. And yeah, for the end of the session was very good. This is the premium that we of 217 that we showed here. As you can see, they expire worthless, but then surprisingly so, I would say, on Thursday, even in pre-market, the stock went up. The IWM stock came back very, very strongly. The stock was already around 240 to start the session, before the start of the session, so it went all the way from 238 to 240, so it came back very strongly, and this is just in pre-trading. And it was on the very highs, 240s, almost 241, and so I decided to go ahead and try to sell the 242 call, all right, but immediately as the market opened, the stock started to fall down, and my order for the 242 call was never filled. And so I decided, all right, most likely the stock will continue to go down because of the reaction of the market, and many times it happens. All right, even though the pre-market went up, the market was still not in a very positive mood, because actually the interest rate decision went according to the expectations, so nothing new. And so I decided to go to the 241, and actually this was a mistake looking back, because not immediately, but shortly after, and I can show this right here, because I still hold shares of IWM. If we look at the weekly chart, Thursday, yeah, this is the one, yeah, it was on the 18th. So yeah, what basically happened is the stock went up and up and up and up, all the way to the close to 244 at the end of the day. Sorry, 245 at the end of the day. So the calls at 242, the calls at 243, the calls at 244 would have been assigned, and yet we were forced to sell our shares at just 241. So a lot of money was left on the table. But yeah, we could never. Yeah, looking at with hindsight is always 2020. But yeah, we left about ideally the maximum we left on the table was 3,600, which is basically the 1,200 shares uh, times $3 a piece. But yeah, there's nothing we could do because we still had some collateral, some buying power available, because we're still collecting so many premiums like this, 1,000 and yeah, in the hundreds. We still went ahead and we used all of that to sell a put on the XLF at 9 cents, expiring the next day, because this was already Thursday. This option would expire on Friday. Of course, the IWM shares were signed, and we sold the shares at 241, keeping in mind that, of course, we bought those back. We bought those last week, on the previous week on Friday at 239. Even so, on Friday, basically, my realization at the time was that, all right, the premiums have been so high, and keep in mind, on Thursday, the decision on the Fed was already in the past, but premiums were still strong. And because of that, I decided, all right, I don't mind taking a little bit more risk, because the premiums that you get by selling the calls are so much more than by selling the puts. The puts offer you more flexibility in terms of setting up the strike price, and you are always more restricted when setting the strike price of the calls, because you don't want to sell calls with strike above or below your acquisition cost. But still, I thought it was very much worth the risk, because the only situation in which this becomes a problem is that when the market goes in a complete meltdown, and there are large losses. And so, because the higher strike price you get with the shares, higher acquisition costs with the shares that you have, and then of course you cannot either sell calls at a zero DTE, zero DTE calls. You have to either enlarge or your maturity, or you have to take the risk and try to sell calls at a lower strike price. But because of the expectation that the Fed will continue to lower interest rates, I decided, all right, let's take the risk. Let's go a little bit more aggressive on the strike price and sell puts now on Friday a bit closer to the stock price. The price was already, by the time the market opens on Friday, was already above 245, and so we sold puts at 244. But because the price has been escalating so much, and we did not took full advantage of of that rise, because we still left some money on the table on the sale of these shares, we were not able to sell a 12 lot size. We have to settle for 11, but still we managed to use the remaining cash, the remaining buying power, to sell two puts on ARKK with an 83 strike price. This was really all about maximizing your buying power and allocating all the money you have, all the buying power you have, towards selling puts. And so by this point we still had some, after the selling of these puts, we still have some, but not much, buying power left. We could not do anything about it, but because of the rise of the market, this XLF put that we sold here on Thursday became almost worthless on Friday. So we bought back at 1 cent, and with that we sold another put on ARKK to collect some more premium on that. So as you can see, it's always trying to maximize the intake of premiums that we get. But the market came down yesterday for the Russell 2000, even though, as you can see here, and this is the funny part, is that the Dow, the S&P 500, the Nasdaq all went up here, as you can see. It all went up on Friday, but the small cap Russell 2000 dipped 0.7, taking back some gains this week after the index touched a fresh record high earlier in the session. All right, so that means the 245. This is what they refer to, the 245 and something. For the AWM, I mean, the record high was for the AWM was 245 point something. And so, yeah, basically because of that pullback, we were assigned the shares. The shares were at some point dipping in the 242.5, but it still recovered in the end of the day, or the pre-market or the post-market trading at 243.21. And that is why the difference between the 243.21 and the 244 of the acquisition price is 79, and so that's why we put here the 79, which basically means nothing. It's just a mark-to-market value. This will be different by the time the markets open on Monday, so there's nothing to be concerned about. But yeah, this was a very, very good week, I should say. Of course, as I showed here in our scorecard and here, the puts on the ARKK expired worthless, so there's no further commitments on that, and we have to buy the 1100 shares of IWM at 244. Now, looking for next week, we still have here $24,500. So, because of that, we are going to sell 11 calls for sure on IWM. But we still have buying power to sell a put. And so, given the price that we have here, if this price, assuming this price, it will be the price by the time the market opens on Monday, I expect to sell a put at around 242. Now, it won't make much of a difference in terms of the average price, because 244 times 11 plus 242, this is the total number, and so we divide it by 12. This will be 243.83, so the impact will be very, very small in the average price if this put that we are going to sell ends up getting assigned. But still, yeah, this is something that we're probably going to do, because we could use this cash to sell puts on ARKK, but I think given the volatility of that particular ETF, being exposed for an entire week on the index, many things can happen. The possibility of being assigned at the end of the week it can be significant, and so unless you go to you use a very out of the money put, which of course makes you receive a very low premium. And so this is probably the plan. We're going to sell a put on IWM and then sell the 11 calls on IWM given the shares that we have. And so yeah, this is it for the time being. Yeah, I think this is all. And so yeah, feel free to leave your comments in the comment section down below. I expect that the next week will be much calmer, and so we'll not be able to get that much profit out of it, but we'll see what happens. Also, I'm available on LinkedIn in case you want to get in touch with me, ask me any questions about the challenge, and of course, feel free to like the video and subscribe to the channel, and we will reconvene either on Monday in the evening or Monday or Tuesday morning to start the week number 61 in this challenge. And I'll see you there.